Hi guys, are we live? Welcome everybody. This is Radio R.I.P and I'm your host, Mr. R.I.P. Relax, relax. It's the end of the month. Money are coming. I thought I was just going to not go live directly, so I'm still not ready. Radio R.I.P. Relax. Just breathe in and buy stocks. Breathe out and sell bonds. That's easy, that's easy. Breathe in, buy crypto. Oh fuck, no crypto, guys. With your ex-Google, ex-whatever, Revolut. Okay, I'm gonna set up things. Do not get crazy. I will come back soon. Yes, I was supposed to be more prepared. Yeah, thank you. Yeah, look how many cool things. Guys, this is not a Q&A. I will have a live stream on Friday as a Q&A. Today it's in English and it's just the end of the month financial update and end of quarter financial update, and that's the favorite time in R.I.P household. Well, not actually, and R.I.P household is just my favorite time of the month, where I can take a look at where money is going, how we are doing financially, and especially when finances go well for us, that's a time to celebrate. And this quarter has been pretty good, so I'm happy to share. Okay, so I will of course take live questions, but I would only take live questions in English language. Okay, guys. It's 15 minutes earlier than expected. I was supposed to prepare myself better, but I have a good schedule. Do not worry. We have a lot of things to go through. I hope you don't get bored. I'll speak English with my Italian English accent, and that's all. Okay. Good. Let me first share my screen. Okay, for the few of you who don't know about me and my blog, well, I don't know what you're doing here, but I have this blog, Retire in Progress, and now a YouTube channel, Retire in Progress, Mr. R.I.P, whatever. And in my blog, I blog since 5 years, almost 5 years. In June, that will be 5 years. And I share a lot of data. I'm a bit scared because I'm oversharing. I'm sharing everything, but I think I think that the transparency of money on money topics is very important, and I'm trying to fight the taboo, taboo everywhere about money, so that if we know more about what money is, what you can do with it, and what it means, how to invest it, how to save it, what I spend money on, what I don't spend money on. I think this is a precious information, because a lot of people, they don't grow up, me neither, nobody grows up with a money education. So I think there's value in this, even though it's always not easy to be the first one not the first one. There are many other bloggers and YouTubers who share their earnings, spendings, and net worth, and their actual bank accounts. I think I'm doing this maybe I can claim to be one of the most transparent YouTuber ever. By the way, Radio R.I.P is going to boom. Okay. I will stop the music. I was just listening in the background. It's an amazing channel, but I don't know if their music is free for use. I contacted them because I loved this music. I contacted them if they will grant me. I'm not an expert in YouTube streaming using music that might be copyrighted. I don't want to risk some problems, so I'm going to stop the streaming. Yeah. And today we have this capability. I can take comments and put on screen. So before we start, let's answer Luca. Hi Giorgio, do you see the Swiss franc euro exchange rate? Oh, I do. I definitely do. And in fact, as you can see here, USD Swiss franc this quarter has gone up 6%. This month alone, 4%. Wait, I'm making some confusion. Yes. So that's amazing. That's 90% of my returns this quarter about the USD CHF exchange rate. Will you show us your bank account? I'll show you the numbers, not the actual bank account. There are privacy information, so you gotta trust, or I don't care. Let me, okay, wait, what? Okay, so I'll show you what's in my bank account without logging into my bank account. So you gotta trust. I've been working a couple of days in streaming quality, so I assume, I'm wasting time until 10 p.m. I can start early, but since I mistakenly hit go live earlier than expected, I can tell you something. I spent quite a few energy in trying to improve the streaming quality, and I assume that you are probably seeing something better than the last live streams. I hope so. I'm trying not to look at the actual streaming, but I can see that the quality from the stats in OBS Studio. First improvement is that I switched to OBS Studio. I was using Streamlabs OBS. By the way, guys, streaming is a lot of work. I didn't know about that. But there are a lot of things to learn, like mixing sources and finding the right bit rate or the right hardware, the right software, the right scene management. I still don't think this chat box is pretty useful, so I get distracted, so maybe I'll turn it off. Anyway, I see a couple of people asking for 1000 separator. Yes, you're right. You're right. Let's do it. Let's do it right now. You are right. 1000 separator everywhere. Oh, that's dangerous. Oh, I'm scared. Ooh. Ah, let's just put here in the totals. Boom, 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 boom. Format, number, boom. Ugly, ugly. Nope, not today, not live, not in production. I mean, I've been a site reliability engineer. You don't do changes in production. So next time. Hi guys, I see that that's quite a bit of people, like 60 people. Okay. Okay, time to get started. So this first episode will be, let's say, let me remove the chat box. Where is it? Chat box here. It distracts me too much. I still have like another chat box popped out, but the one in overlay disturbs me a little bit. I can get distracted. So this is the first time I'm doing this live. So who follows my blog knows that I have this routine that's now become quarterly. It used to be monthly. Well, I still do monthly, the same routine, which is tracking my net worth, my family's net worth, and starting a new column for another month. So now today is 31st of March, and so March is over and April is coming. So I will set up the finances for the next month. I will review the finances for this quarter, this month and this quarter. But this time, since it's the first time we do this, I will also explain how my spreadsheet is made, and I will share for the first time my private expenses sheet. I cleaned a bit. I think I showed some screenshot in a previous live, but today I'm gonna investigate a bit. Okay, so in the description below, there's a link to my spreadsheet, and I see that there are already a few people. You don't have to go there, do not worry. I might actually disable, okay. And there is also a link to a post series on spreadsheets that I have written a few months ago. So it's been a very long series. It didn't get much attention, and it's okay. It's something super nerdy, super specific. A couple of dozens of people told me they loved it, and many people are implementing my spreadsheet, and that's nice. So if you want to know more about the formulas and how I calculate my numbers, feel free to read it. Okay. Okay, let's before we start, your net worth is only yours or summed up with the one from history? No, we are joint. We have a joint economy. We are married in Switzerland. It's like if you're married, there's not much you can do unless you do something very specific, very intentional, and not always safe, even if you sign any kind of nuptial agreement or whatever. So we have joint economies, and she also earned some money during this time. Of course, it's 95% made of my earnings. Okay. Good. Okay, so March is over. In my main spreadsheet, which is the one that's public, I have several sub sheets, which is net worth, expenses, and some other spreadsheet. I mean, they're called sheets. The spreadsheet is the entire one. Every single one is just a sheet. So, for example, this is a sheet, this is a sheet, this is a piece of sheet, this is a spreadsheet, pieces of spreadsheet. It's a sheet, just a sheet. Anyway, first block. Let's zoom out a bit. So if this comes messy, it's first time for me explaining live, unprepared. So yeah. So the first portion until row 55, this is the net worth section. Okay, so this is what we have where and invested in what. The first part is ETFs and stocks. This is just pure stocks. As you can see here, it's the ticker. Okay, and here is the here was the situation on the 31st December. Like it was not. I'm not going to explain everything. Like it will take 12 hours, but I was pretty scared. I still am. So I was not investing in stocks. So to make it short, at the bottom of the market last year, I was very greedy and I bought a lot of stocks. But when they recovered, they reached a new all-time high. Just 4 months later, for me, it made no sense. It still makes not much sense, but you gotta believe in something. So I'm coming back. I have a plan. I've written about my plan to get back into stocks gradually this year. So like doing a dollar cost averaging back into a sane asset allocation that in the meantime I changed several times, and now we will quickly review. And so I'm investing at the moment in these ETFs. There are other ETFs I want to buy, but I'm not at the moment. I'm committing to move at least 50,000 euros or francs or dollars, at least 50,000 euros, let's say, from sheet to stocks, or to, as I said, a sane asset allocation. And at the moment, this is the VYM and VYMI. Those are Vanguard high dividend growth stocks. I'm not a huge fan of dividends investing in general, but so for young people, for those who have a career in front of them, for those who seek growth and like exponential growth, I'm not a huge fan. You shouldn't. But I'm old. I'm at the end of my career, and I'm scared. So I look for some illusion of yield. So I'd rather get something which gives me the illusion of paying me a small cut than going all game stock. So here, as you can see, I bought a lot. Like look, in March, I'm buying. Here you can see details. Like in notes, there are details. Those are like dividend growth. This is value US. Okay, this is dividend growth US, dividend growth non-US. So at the moment I have 72, and this is dollars. This is value stocks US. This is small cap non-US. I mean, it's lacking some component. I still need to find the right ETF for small cap US. And this is Coca-Cola, out of nothing. At the moment, I'm not the best guy to take as an inspiration for investing, because I'm still scared. I'm looking for boomer stocks. I want to get more boomer stocks. I want stocks that are solid companies and they don't cost much. They give you a dividend. I'm looking for that, which is not something I recommend in general. Yes, how I track them. If here you can see that I have the number of stocks, and then I have the multiplier, which is the stock price, which is here. And in this section, I track it using GOOGLEFINANCE API. Okay. Here I put the string, which is good for Google Finance. Here I get the currency. So if, well, this was useful when I was not using the stock exchange colon ticker, because sometimes the same ticker was like tracked or was traded in different stock exchanges. So sometimes I got like pounds, and Google Finance was pretty crappy, but then I was crappy because you need to put, if you want to be precise, you need to put stock exchange and then ticker. So this is like, here I could hard code the currency dollar, and that's okay. So this is the price of things. Here I freeze them when the month is over, and we're going to do this in half an hour probably. And here I have last month change and year to date. As you can see, the crappy bonds I own, but more on that in a minute. Here there is the section of third pillar, which is invested 99% in stocks with FinPension. Okay, that's my third pillar. I have 2 third pillar accounts, and then my wife, she has 1 third pillar account, and this is the current value. I just cut and paste the value, and when I do extra deposits, for in February I deposited the jackpot for 2021. I strongly recommend everybody to just put as much money as possible in the third pillar, and as possible is 6,883 in 2021. Just go for it. Just go for it. So yes, here I also account for expected taxes. That's something people usually don't do. I prefer to do. As you can see here, here, and here, those are expected taxes on tax deferred accounts. What does it mean? It means that we have roughly, what is this, 115,000 in third pillar, but we will never get 115,000 in hand. At one point when we will withdraw that will be taxed. So what do? I have an expected tax rate, which is here, is probably this one, 6.5%. This is just based out of like that should be good. I've done some research. I know that it will really depend on where we will withdraw the money, when, and how much at the same time. Because if you can split second pillars and third pillars, and then you get taxed based on your canton, or you're gonna get taxed based on how much money you get out of pension funds, and it also depends if you move abroad, then you might get taxed there. Italy has an amazing agreement with Switzerland that all pension funds are taxed 5% flat. So if I will get the money because I moved to Italy, this is like an overestimate of the actual taxes, which is always good. I always overestimate the negative things and try to underestimate. It's the opposite. I try to, how can I say? I try to be more pessimistic here. So things can go only better than this. Now, there are scenarios where things can go worse than this. For example, if you accumulate more money in tax deferred accounts, this is maybe not reasonable. This is based on Canton Zurich up to 500,000. If I keep working until 65, I will get much more money, because what's getting taxed as a tax deferred account? Third pillars, vested benefit accounts. This is my wife's small second pillar with VIAC. So we picked FinPension as a 3A account and VIAC as a 2A for my wife, just to test drive it. It was just 4,000 Swiss francs. Of course, for those who are Italian and they have no idea what I'm talking about, I'm sorry. That's Switzerland. I don't know how many non-Italians there are. I don't answer Italian questions, guys. So make the effort and ask questions in English. I will take some question right now. Give me a sec. Okay, there are, wow, 94 people, guys. That's pretty interesting. Okay. Let me just try to reply. Okay. Adriano asks, what the sign? Maybe I should. I'm switching between windows too frequently. Maybe I should fix something. The second column, the column B, I think you're asking. This is the currency, right? You're right. I mean, yeah, I'm assuming too many things. This is the currency, which means every asset, every row is an asset, and every asset has a currency. So this is 35,000 what? Dollars. This dollar, E is euro, and F is francs. I should have called CHF, because in other spreadsheet it's called C. But yeah, I mean, so this is dollars. This is Swiss francs. And those are euros. So it's like everything, as you can see. Let me take some other questions. Bam. What do you mean? Of course, Trouble Productions. To see the live again. Well, the live will be updated, like uploaded after the stream is ended. Okay, so why not an iShares in ETFs? Nice question. I used to have, yeah, let's do some history. It's the first time. Let's go back to 2018, 17. Boom. 2017. Boom. It was much simpler. Look at how simple was this. And how crappy. Back then I had several iShares, like CSSPX is an iShare, XUS is small cap US, Pacific excluding Japan, almost all iShare. Why I have more Vanguard? I don't know. I switched to Vanguard because I moved definitely toward US domiciled ETFs for everything which contains US stocks and US assets. And for US domiciled ETFs, Vanguard's ETFs are usually better, cheaper, more liquid, but it's not a huge deal. It's iShare, Vanguard, those are like huge providers. But maybe the question like hid something which is important. Maybe I should diversificate also among fund issuers, even though I don't think that too big to die. So Mike Donnarumma, why not VWCE accumulating? Because it's Ireland domiciled. I prefer to have a US domiciled fund. I'm in Switzerland. Switzerland is different. We have an amazing double taxation agreement with US. I can recover all the US withholding tax. I'm not sure. I'm not following closely that, but I think Ireland domiciled ETF, I don't know if you're able to recover a fraction of the US withholding tax on dividends on US stocks. So if I move to Italy, if I move back to Italy, if I need to refactor my investments, I will go with VWCE. Accumulating versus distributing in Switzerland, it's irrelevant. It doesn't matter. In Italy, I know that it's a bit different, but here it doesn't matter. You get taxed anyway on the dividend. You don't get taxed on capital gain. Boom. From tax bracket, another great thing. Yes, you're right. You are definitely right. Problem is that I want to invest in companies which are solid. I want to invest in companies that are not overhyped. I want to invest in companies that are not like just growth company. I want to invest in company that has profits, like a lot of profits, and they don't aim to conquer the world, so they redistribute the profits. I want to invest a good portion of the money there. I still want to invest roughly 50%, maybe less, in other kind of companies which like also on the world market cap that also contains all the FANG, all the Teslas of the world and GameStops of the world. But I'm tilting much more toward companies which have a lower price to book and lower price to earning ratio, and they usually correlate with being dividend companies. That's just a correlation matter. And yes, it's inefficient. I get taxed on dividends. Yes. Boom, 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 boom. There's no KO ETF. That's just a stock. There's no KO ETF. It's in the section of stocks ETFs because it's stocks. So this should be just stocks. Some are ETFs, some are just stocks. I say no question in Italian. Anyway, okay, this one, Jonathan. Why no emerging markets dividend ETF? I have in my target. We will see. Okay, I think you are very interested in general into my asset allocation. So let's move into the control room of my investments, which is this sheet, which is called Long, Short, and Fun. Because I wrote a post which is called 2020 Q4 Update Part 2. Where I explain my future strategy that in the meantime I simplified, and the strategy is the following. I want to invest part of my money. I just want to keep it in cash. Okay. Part of my money I want to have for fun and invest in crazy things. I have no idea yet. I've not invested in any fun money yet. And then part is the good old bond stocks. I'm not sure I want to hold bonds in the long term, but I can consider all my second pillar as bonds, so I can cheat a bit. So what are those percentages in the target? So this is net worth. Okay, this is net worth. Those are fixed amounts at the moment. Of the remainder, this is the target allocation bond stock split. Okay. So stocks, I should be investing this, and bonds, I should be investing this. And here you have comma separator, so bonus points. Where those weird percentage come from is that at the moment I'm following a strategy which is based on world price to earning ratio. Okay, and so I'm allocating between 10 and between 50 and 100% in stocks, and the remainder in bonds, depending on where the world market the CAPE is, between 10 and 30. If the CAPE, for those who don't know what CAPE is, it's too much time. Next time. If CAPE is above 30, I'm less greedy. I'm really reluctant. I'm greedy when there's blood on the street, and I'm scared when others are fearful. So Warren Buffett said that. So when the world price to earning ratio cyclically adjust over 10 years is 30 or above, I will only invest 50% in stocks. If the world price to earning ratio is below 10, which is we're not going to see this in our lifetime probably, I will be 100% in stocks. When it's in between, it's a linear interpolation. So at the moment, the world CAPE is 25.4. I have several sources. This one is my favorite, and you can track it on my spreadsheet. This is amazing. I see I'm dropping some frames. I should stream at 15 FPS or upgrade my computer next time. So here you go. This is called research affiliate. I got chart, CAPE ratio multi-country, all country. Let's see if it changed. Boom. Is it 25.4? I just monitor it a bit. I'm taking this metric, so might be stupid, might be whatever. If this changes, if I for example set this, now CAPE is 15, boom, it tells me that I should invest only like I should be more aggressive when things are cheaper. If CAPE is, oh, it's 50, there's only Tesla in the market, I should only invest 50%, which is my floor. So it's arbitrary, but it makes me feel better and feel smart, even though it's just bullshit. So at the moment, 25.4 worth CAPE is close to 30. So this is close to 50-50, a bit above. Okay. Then after, stocks. Within stocks, this is my ideal asset allocation, and I'm changing it every day. Okay. This is just entire word, like Vanguard VT, or for Italians, for whatever, VWCE or VWVL, the other one distributing, or there is also ISDA from iShares, like just a word, like everything, including emerging markets. I go for all country word. So this should be actually ACWI, all country word index. Plus, like everybody, I want to be a bit more overexposed to emerging markets. But at the moment, the only exposition to the entire world is this, which is my pension fund. So my third pillar, our third pillars. Those are invested in FinPension. We took like Global 100. So they're invested in stocks, whatever, all world. I see there are many more questions. I cannot keep up. Okay. Let's keep going. There's a lot of things to uncover. Okay. So within stocks, my ideal allocation would be 30% like baseline, the entire world. 10% extra exposure to emerging markets. It's a lot, 10%. So I'm tuning, let's say, 5%, but then 35% here. I don't know. I'm just playing. And here is like my spreadsheet calculate. This gets data from the main sheet, which is summing column and doing all the magic to calculate my current exposure to this market. Okay, this is the target, and this is calculated, of course, based on the allocation, ideal allocation in stocks and the current percentage. For example, as you can see, you take 35 target percentage of 828,000 target percentage of stocks. So within stocks, 35% should be worth, and then you get, boom, you should be investing 290. I think here the currency is Swiss franc. So it's also converted everything to the same currency because it's a mess. Living in several currencies is a mess, but it's just math. So it's not that of a mess. And here this column is the, okay, what should I do? It says you should buy 180,000 Swiss francs. So probably $200,000 of Word. So just buy $200,000 of VT. Let's not get ahead of ourselves. Okay, once at a time. Emerging market, like separated from the world, I'm at 0. I should buy 5%, so 40,000. The target is probably EIMI. I already owned EIMI for a while. Why I'm not buying? Because I solved it at 30, now it's at 36. I shouldn't do this. I know. Maybe I should just get another ETF like VWO, I don't know. But I mean, I have a lot to cover here. I'm short. I mean, I'm missing almost 500,000. So I will first put money where it hurts less, and it hurts less to invest in ETFs that I haven't bought in the past. So I don't have a comparison. I know it's a mental bug, but we're humans. As you can see, small cap, I want an extra exposure, 10% on small caps. 10% of small caps. And here I have ex-US and US. On ex-US, I have VSS, which is Vanguard. I mean, I'm essentially just turning at Vanguard whenever I need to find a new ETF. It's my first provider of choice. So yeah, so VSS is world, small cap, ex-US, entire world, 5%. I have invested something here, 24,000 Swiss francs, which means boom here, VSS 20 whatever US dollars. Okay, let's keep going here, then we will maybe accelerate a bit. And then here I'm going mad with this, like 50% of my allocation is in value / high dividend. It's something, it's a boomer thing, it's a Gen X thing. I'm a Gen X guy. So yes, okay. I mean, I'm okay. I want to have value stocks, high dividend stocks, even some individual stocks, not many, but I'm okay with having Coca-Cola, for example. And I'm also looking at other boomer stocks like Intel or some financial thing. I'm looking at like standard Swiss, like Nestle. I'm actually trying to buy Nestle. I'm trying to buy even UBS, which seems crazy, but there's a price to earning ratio below 10, gives dividends. I don't know. I want like stocks that are not Tesla, like whatever, stocks that are not Bitcoins, whatever. I'm okay with lower expected returns. I'm super okay with lower expected returns. I don't need like to make 100% per year. I'd be okay with getting like 5 or 6%, but I don't want to lose 50, 60. I don't want to lose a lot of money. So I have different target. Just don't take what I do and replicate. Just get the inspiration if you like it, or at least get inspired by the formulas. Let's copy the formulas. Here, as you see, here is where I'm doing much more action. So I'm investing in these things. So I'm almost at the target. Well, not yet. Still a lot of room for improvements here. Anyway, I need to buy 400, like 500,000 Swiss francs in stocks, and of course I should sell roughly the same in bonds. I consider my second pillar and all the money which are kind of locked in and they give you at least 0% return as a bond. So my second pillar, the deposit for my flat, or some Italian bonds that I own that are like, those are amazing. They were 2004 issued, are giving 6%. Sadly, they will expire in 2024. It's Buoni Postali Fruttiferi Dematerializzati Class A4, which is amazing. And as you can see here, I have some money. But those are, they're not, I cannot tune them. So I've just said the remainder is 100% in, at the moment, US bonds, because the other two are Euro, Swiss francs. I'm okay to get in US bonds. I want short-term bonds. I don't want to risk much. So at the moment, I should own 200,000 Swiss francs. So 230,000 US dollars in bonds. But at the moment, I have 600. I have a problem. Yeah, the column I is telling me sell bonds, buy stocks, but I told myself this is the target. I want to reach the target by the end of the year, so I'm slowly going there. Okay. Yep. So this is the target allocation and where I'm now. But I'm happy because let's go back here. I'll take some more questions before we move on. But if you look at how I was at the beginning and how scared I was at the beginning of the year, I invested quite a lot, like 300,000. I was at zero, so I'm doing my part. Also went turbo aggressive with third pillar, fin pension, boom, VIAC, whatever. Bonds, they're mainly okay. Before we move on, let's take a look at some question. Luca, any reason you prefer Google Finance instead of Yahoo Finance to get asset prices? Well, Yahoo Finance is much better, but if I don't die by Corona by the end of the night. But Google Finance has APIs within Google Sheet. I never tried. Is there a way to get numbers from Yahoo Finance in Google Sheets? Some simple way. Yeah, I have a bad cough. What could go wrong? Okay. Oh, wow. Hi, Giorgio. May I ask you why you don't consider taxes on your stocks, but on your pension fund? Well, stocks are after-tax money. Which tax should I pay? Oh, sorry, guys. I mean, I don't know what I have. Okay. I don't consider taxes on my stocks because here I'm considering the stocks, my brokerage account, it's after-tax money. And we don't have capital gain tax. If we had capital gain tax in Switzerland, I'd probably consider, maybe I would consider. Oh, I may need. Oh fuck! Sorry. Okay. Why do you still have Buoni Postali? It's because they give you 6%. They're not bad. I think I replied to this. How many brokerage accounts do I have? Only one with Interactive Brokers. And I don't know if you count them as brokerage account. Like pension funds, they're not brokerage account. I only have one with Interactive Brokers. And I have roughly 1 million francs in it. So it might be worth considering some diversification in that world as well. I see that I'm dropping a lot of frames. I'm slowing down to give me some room to breathe. Why do you buy just KO and not other thousands of good value stocks? That's I mean, I'm just starting into investing in US stocks. You know what? I just bought KO with one action. I just bought 1,000 stocks together at 50, at 49.99, I think. Here, when I bought KO, here, I bought 1,000 stocks at 49.99. That's a discount. It ended with a 9. The problem is that I did it almost like as a reaction with the world that was saying, oh, there are NFTs everywhere, you should buy a CryptoPunk, and it goes to $2 billion. I want to do something in the really opposite direction. What's the most boomer action I could do? Just buy the most boomer stocks in the world, which is probably Coca-Cola. So I just bought Coca-Cola. And I say, okay, we will reason from there. So far, so good. It went up a month. Also distributed a dividend. Okay. I just got Corona live. Okay. Sorry. Maybe I should take a small break. I'll be back. Give me 2 minutes. I'm back. Sorry, let's see. I just ate a liter of honey. They say it helps. I really want to go through this, so one way or another, even though I'm getting Joffrey Baratheonitized, as you call. Okay. Let's take some other question before we move on. Hi. Yes, ACWI, all country world, includes emerging markets. Else the word is, yes, I know. I want to be overexposed. So I want to have more exposure to emerging markets. So that's why, yeah. Mike, Coca-Cola is an aristocrat dividend stocks. Yeah, I think VYM and VYMI tracks those stocks who had dividend growth. So they were issuing dividends and issuing dividends we were growing. Coca-Cola is doing. I don't think it's anything that ensures anything else. It's just a trick. Some companies had to do other magic to keep their dividend growing, but it should be relevant in the long term. Okay. Oh, there is someone who needs to be kicked out. So how do I do this? Remove. Not just a message. I want to remove. Hide user on this channel. Bye. Okay. Welcome back. Francesco, do you trust Revolut? I have a trust level of Revolut which is going down. They started like an amazing fintech, but then they lowered the amount you can do for free. They started putting fees here and there. They introduced a fee to send you the first credit card. I use it to exchange money with friends. It's okay. I have few hundreds of euros. That's good for paying internationally. So sometimes I use it on Amazon. When living in Switzerland, you have problems with everything which is not Switzerland, and everybody wants either euro or dollars. So you don't want to let Amazon or other online stores do the conversion for you. So it's better to have a way to pay and to reduce currency fees. Okay. Okay. Yeah, this is Pepsi Cola, Coca-Cola, Microsoft. I'm looking into those, but Pepsi is pretty expensive. Microsoft is also pretty expensive. I'm looking more into things like CVS, which are like going down, old ancient companies, or Intel, CVS, State Street. I'm looking into some companies and I'm selling short put on them. So I'm actually like opening limit orders and guaranteeing. This is another like short puts, like stock options, and it's another episode. Okay. What is your take on ETF Smart Beta? Like Smart Beta is a bit abused. So if you're talking about some specific ETFs, or unless you mean like factor investing, if you mean the factor investing, that's an amazing thing. And I'm kind of trying to do some factor investing, which is like small cap, value. I don't do momentum. Anyway, yeah. Okay. What do you think about Degiro as a broker? It's okay for small amounts. It has many security and I don't know. It's trying to find this word in the regulation. Where it's a Dutch broker. They have different regulation. I've heard like good thing from retail users who they have like not much money, but as soon as you get a real amount of money, like a 6 digit, like 100,000, switch to another broker. Okay, let's get back on track. Okay, I think I'm better. Okay, so the situation is this. I've invested quite a lot, like 300,000 in stocks and removed from the evil bonds here. You can see I used to have at the beginning of the year a lot. Some did show up. Well, let me do it for you here. I have the split, asset allocation split, stocks and bonds. I had more than 1 million euro. This is converted everything in euro in bonds, and now I'm at too much. But a lot of it is also like pension funds. So and I'm raising in stocks. I have an amazing net worth by asset class. Here, as you can see. Okay, the last one is because probably there's something. Okay, this one is not filled yet. Here, as you can see, this is like how much stocks. The blue part is stocks, the red part is bonds, and then I used to have real estates at one point, and then cash and others. And here, as you can see, like stocks went down to 10%, and now they are raising, and they're actually at. Here I have the percentage close to 25% at the moment. Yeah, and this gap will close. Yeah. Okay. So in the bond world, I had BND, which is like US bonds. So why US bond? Why I had $1 million in US bonds? That's a long story, because when I sold stocks, I thought I would just sit out for a while I thought about a different strategy, but this while became 6 months, like from end of July last year. So all August, September, October, November, December, and then 5 months. During those 5 months, the dollar lost a lot, so it was painful to see some losses. Anyway, losses that we are going to just quickly measure. I publish updates all the time, but if you can see here in 2020, since August, the net worth didn't grow much. It still grew in the US, in euros and in Swiss francs, but not compared to what happened to the market. So I was not growing as much as I wanted. I mean, as much as I could have grew. So I decided to, okay, let's slowly get rid of bond. First, I got rid of BND, which is like all maturities, US bonds, both corporate and government. And as I said, if I want to have just money for the short term, money that I can use tomorrow, I'd rather have short-term bonds or even cash. But having $1 million cash on Interactive Brokers is not something that made me sleep at night. So I said, no, I'd rather have whatever is closer to cash. And I took BSV, which is short-term bond. There is even ultra short-term. There's even something closer to cash. The problem with bonds that are not close to cash is that as soon as the interest rates they go up, the longer the maturity of the bonds, this is bond ETF by the way, the more they lose. So since the bottom of the bond market, they raised they raised a bit interest rates. So whoever was holding long-term bonds, they lost money. So now I don't know. I mean, BND, how much is it now? 85 something. Let me check. 84. Wow. Okay. Yeah, I acted stupidly. Luckily at one point I decided to stop and sold all the fucking bonds here at 87.55. I sold, like, it was a 700,000 transaction, like, seemed like buy a million bond, whatever. But then I bought directly BSV. So at one point I had $920,000 in short-term bond, and now I'm selling 1,000 at a time, 500 at a time. I'm selling them. Okay. Then here we have all the cash accounts, like Italian post account, Euro Post Finance, Interactive Broker cash. I have some cash in euros. I don't know why. PayPal, Amazon credits for the blog thing, real cash bills. Oh yes, let's do the John CRIPstani thing. Yeah, I have cash. You can become millionaire. You can get millionaire here. Those are 790s. The problem is that they look a lot. To me, oh fuck, I have a lot of money, but this is just this stupid small number that's just 3 digit. Anyway, there's actual cash. I think I got it. I don't know, last year we were planning to move to do some vacation. I needed cash, then they got cancelled. I still have 790 euros in cash. And then, like, the real money are in post finance. I try to keep 100,000, not more, not much less, like a emergency fund. It's 100,000 Swiss francs. And then Interactive Brokers. On Interactive Brokers, I have a lot of cash because it's complicated. I'm selling short put, and you have cash, unless you go margin. I don't want to go margin, but you need to have cash. So my cash is locked and earning some interest on the short puts I'm selling. I'm not going to discuss about that now. I will probably do a video and blog posts and whatever. Okay, so this is cash, and here taxes. Yeah, let's go. I mean, taxes, it's a mess. I still have tax year 2017 open. I mean, I expect to have to pay 8,000 euros for 2017 taxes. This is the difference between how much I paid in advance and then the final calculation based on my tax declaration. So I'm waiting for them to tell me, hey, yes, your calculation is correct, so give us 8,000. I'm just waiting. But on 2018, I expect to get back 7,000. I'm still not. I mean, guys, it's 2021. If you're Switzerland, you cannot wait like 5 years. Give me my negative money back. Give me this minus 8,000 back. 2019, this is okay. Something changed because on January I paid a lot of 14,000 estimated Bundessteuer, so it's federal tax. So I expect from the city and cantonal tax to get back some money. So as you can see, 2017, 2019, I should get some money back. And in 2019, I also have some withholding tax credit. Those are the US ETFs that they issue dividend, and the US government withholds some taxes, and I expect to get it back. I filed my tax return in August 2020 for tax year 2019. So I mean, they're still processing 2017. It will take time. I heard that the DA1 form should be faster, but apparently it's not. On 2020, I expected to pay a lot of taxes because I underpaid my taxes on purpose. I mean, here in Switzerland, for those Italians, they may not realize, here in Switzerland, once you have the permanent permit, like the green card, I have a C permit, you pay tax on your own. You don't pay taxes on your salary. They give you the entire gross salary. Hey, here's the gross salary. You just get deducted pensions, or some other insurances, but then you get the entire gross amount after pension funds. And that means that you have to pay taxes on your own. You might pay advances. You might say, okay, I'll pay some 10,000, whatever. They send you some provisory bill. They say, hey, we think you are gonna pay this amount. If you want to pay it in advance, it's better, because if you pay before September, you get some interest. If you pay after September or even in the future years, you need to pay some interest. But I think that this interest went to zero. So there are people who just postpone 3 years payment of taxes. That's how amazing taxes in Switzerland are. But then you have much more complicated tax situation, because you have cantons, cities, and the federal government. And so I underpaid taxes. Then they sent me on March a provisory bill for the federal taxes. The federal taxes is a bit different. You cannot pay in advance. They need to send you a bill, but since they are late, they send you, hey, this is your final provisory bill. Just pay this amount. Then when we will do the calculation, we will either give you back the money or you give us the difference. And they were still making this bill based on my Google salary. I said, and they so sent me 14,000. And I told them, hey, bro, I lost my job. I'm poor now. I make less money. And at the phone, the lady said, okay, how much do you want to pay? I don't know. Let's assume my gross salary is, I don't know, 160,000 this year. Okay, cool. We will send you a new calculation. So they sent me 7,000. So I paid 7,000. That's nice. It's probably, it wouldn't have mattered. I would have paid 100,000. At one point, like in Google, I remember that they were still giving you back 0.5% of interest if you overpay taxes. So there were like a group of Googler who planned to overpay taxes to use the tax office as a saving account with 0.5% interest. Like imagine in Italy if you just, okay, I will overpay tax. I will pay 100,000 more in taxes. So then the government will give it back with interest. Yes, sure, sure. So I was expecting minus 12K. So now I'm expecting to need to pay taxes, but have back some money from the US. It's too complicated. Then 2021, I'm expecting to pay taxes, and whatever I paid zero so far for 2021. So I'm negative. So on taxes, I'm negative, but with this like weird situation. So how do I calculate the expected taxes? That's a nice question. It's explained in detail in my blog, in the spreadsheet series. I just do like this is aggregated. So in March, this minus 8,000 is not for March. It's like aggregated up to the end of March. So the sum, the calculation is whatever I owe the previous month plus whatever I owe in income taxes for this month, which is calculated here based on the income stream. Boom, this is expected income tax. What I do here, I sum all the income sources and I have an expected tax percentage. So I'm doing another guess. I'm getting pretty good at guessing. And I guess just 15% tax bracket, which seems, oh fuck, yeah, welcome to Switzerland. But it's not 15% actually. It's 15% on, I'm estimating 15% of my entire gross salary without considering deductions. I know that I will have deductions, so I know that I will have roughly 20% of the salary will be deducted. So this is equivalent to a 18-19% effective average tax rate. So, but it would be too much complicated to account for deductions. For example, childcare is deductible. Other voluntary payment to pension funds, they're deductible. I just guesstimating, and I usually get close to that. What time is it, guys? This is going to last forever. There's still someone. I'm not checking. It's 140 people, guys. You like this? You like the stock? Okay. But anyway, this will be very long because it's the first time. Next at the end of April, I will just do the current month and be explaining something more about the investments, whatever. Here I'm explaining my spreadsheet. Just take a look. There are comments somewhere here. And then here in the other, there are like the credit card debt, which, by the way, I always pay in full. So at the end of this month, we spent 1,700 in credit card. So it's like grocery store, whatever. Like these are expenses which are not the fixed one at the beginning of the month. But then like on the 3rd, on the 4th, on the 5th of the following month, I will pay this in full, and I will start from 0. It goes negative every time, and then it's always negative because at the end of the month I have a debt with the credit card issuer. I use Cumulus Mastercard. Okay, it's a Swiss. Okay, who's not Swiss is getting bored like hell. On the other CHF, I usually track like during the month I will put like expected income. And as soon as I get the income, I will cancel here and then put the income in the bank accounts where it shows up. I still have something expected in USD, which is who has Coca-Cola, 42 cents per share dividend, and 1,000 shares, 420. So this is like, it's already in my, the stock is already ex dividend. So they just need to arrive on my bank account, and it's happening on the 1st of April, so tomorrow. So for me, it's a credit. Okay. And that's it. So how do I sum all these numbers in different currency? With a formula. So I do sum if, whatever. If it's Swiss francs, just sum and divide by F76, which is hard to guess, Euro CHF. So the currency conversion. If it's euro, don't do anything. If it's dollars, divide by Euro USD. Okay. So this is current net worth in euro for March. Someone asked, you have 1.3 million euro and almost 1.5 in Swiss franc and more than one. You have 5 million? No. This is just the same amount converted in different currencies. Okay, why? Because I don't know which currency should I track. Probably not dollars. I shouldn't care about this. But for the rest, Swiss francs or euros, I care about both because I don't know where I'm going to live in the next several years. I used to care more about euros because I was sure I was going to move back to Italy. Now I'm not sure anymore. I'm not sure. So I'm pretty happy when the amount in Swiss francs go up. I will comment and celebrate this, and then I'll take some questions, and then we will move on. There's a lot of things to do. Do not care. So how did this quarter go? January was pretty meh. Okay. So in euros, the net worth grew by, this column is the change, the monthly change. So it was just meh. In February, meh, but not in Swiss francs because the Swiss franc went down. And March, that's amazing. My ETFs, individual stocks, and whatever, exploded. So I think it's the best month ever measured in Swiss francs. It's plus 62,000. It never happened, never. That's amazing. I'm getting close to 1.5 million in francs, which is cool. Okay, and for the quarter here, you can see is up. It depends. Now I'm cherry picking the measurement, the currency, but since now I'm much more convinced that we are trying to stay in Switzerland forever. Trying to. If I can get fun and working as a blogger, as a YouTuber, and try to find a way to make enough money to compensate for what's missing after passive investing, we might stay here. We like here. We love living here. So now I think I'm going to switch to mainly track the Swiss franc net worth, which is at the moment close to 1.5 million. So the net worth grew by 62,000 Swiss franc based on the whatever, on like what happened essentially. Well, the Swiss franc lost terrain versus the US dollar. So my shitty bonds that didn't go up, actually they went a bit down, but they issued dividends, whatever. They gained 6% just because they are measured in US dollar. That's not fun. It depends on other currency, but that's how it goes. But how much of this? Let's track Swiss franc. So this quarter is plus 100,000. Okay, so I was 1,377,000 at the beginning of the year, and now I am 1,480,000 plus 104. How much of this is due to savings? How much is due to investing plus currency fluctuation? Here you go down a bit. In the meantime, you have other aggregations here. If you want to play with the spreadsheet, you make a copy, you do whatever you want. And then here I have the cash flow, which actually is not cash flow. I'm mistakenly naming cash flow. It's just like an income statement. So here salaries. So sadly, my wife is not earning anymore. She tried hard to get a job, but she didn't. It's complicated. But I got a weird bonus in March, like more money than expected. My base salary is this one, is almost 15,000 per month. I think it's going to be reach 15,000 now because I got some compensation back, so that I will account in the future months. Then there is like blog income. Ooh, the blog is earning some money. This is giving me excitement. I would love to comment. Boom, let's take a look. And I mean, in March, February was amazing. I mean, almost 3,000, mainly from referral, from service that I'm offering, donation, whatever. In March, it's a bit less, much less referrals, and I'm doing financial coaching, even though I've not launched it yet, but people are asking me, and it's like, okay, let's find an agreement, whatever. But yeah, that's amazing. Dividends, not bad. They're part of the returns of the investments. So the bonds return something, so $760. Coca-Cola, yes. Other stocks, other ETFs, it's 2,000. Not bad. I aim to make this grow because I will invest more in dividend things, whatever. Second pillar. So this is the final income, including expected taxes. So all the entries here, these 4 entries, they are pre-tax. So I'm expecting to pay taxes on my salary, on the blog income, whatever, even though maybe I may be able to deduct some costs, but I don't know yet. I'm wasting a lot of time. I mean, I should make it more official. Go to the Swiss whatever office and open I don't know, a company for the blog or whatever. I don't know. I know that here, if you are employed and you have a side gig up to 100,000, they don't give a fuck. You just declare it and you pay taxes. But you can avoid having like complex structure. But as soon as if I will quit or when I will quit, that will be for them, either blog or dividend, my main source of income. So I will need to have something more. This is different from Italy, very different. So in the end, the total expected net income. So this already included no taxes. It's been 55,000 for the 3 months. This is Swiss francs. Expenses. Before we move to then we will deep dive into expenses. Roughly 7,000 per month. Actually, pretty exactly 7,000 per month. It's like dang. With something more in January, something less in February. But now I fear when we will be able to buy flight tickets again, and because we are planning to travel, to visit parents, to make a summer vacation that we are like so long waiting for. So the 7,000 baseline per month, it's a baseline. So we will spend more than 84,000 this year. So 84,000 is 7,000 per month, and that's like baseline plus vacation plus travel. I expect 90,000 this year. That's horrible. Still 50,000 for this quarter income, 21,000 outcome income expenses, and so the saving is 34,000, which is 62%. Yes, celebrate. Before I take some question, I heard that this helps with the coughing, and that's the perfect whiskey for a software engineer. I'll get some question, but in the meantime, amazing quarter, plus 100,000. So as you can see, so the saving component, so this month, if we had all our money in December, just took them, withdrew in cash bills and saved under the mattress, we would now have 34,000 Swiss francs more. But since they are not all stored under the mattress, we now have 100,000 Swiss francs more, which means 70,000 that it's thanks to the market or thanks to the currency fluctuation, mainly thanks to the dollar. Okay, let's take a break and questions. Let me see. I don't know. Give me also some feedback about, are you liking this or it's boring or whatever? Okay, let me check. Yeah, the question I'm really good at answering. What do you think would be the next moonshot? I'm not looking for that. I'm looking on the opposite direction. I want like a stable, like COVID resilient business. And maybe I'm going to, like a friend suggested, go on. There is a company who sells all the liquors and whiskeys. I think someone asked about ethics. I'm going to answer that as well. So what do you think will be the next moonshot? Everything that's possibly a moonshot has been exploited. So either, I think something we are not valuing enough at the moment, some technology which is not getting the hype it deserves, is AR, VR. So I don't know. Find a company who makes visor, but this is not a financial advisor. Okay. Boom. Lorenzo, in your decision, do you buy stocks with a sort of ethics? For instance, not buying from weapon companies or tobacco stocks? Oh, yes, but this is based on my personal ethics. Well, of course, when I buy the world index, there is something inside. I'm not there cherry picking. But if I need to buy individual stocks, I would never buy weapon or tobacco. But then there are interrelationships. So what if Coca-Cola advertises tobacco something, or I don't know, it's complicated. But there are things I don't like and I would not go there. But for example, I don't dislike whiskeys. So alcohol beverages, like even Coca-Cola, it has an ethics problem because I mean, how many people are dying thanks to Coca-Cola every year for diabetes, or you know that's the main reason of dying in the world is like diabetes probably. So maybe even Coca-Cola is not very ethic. Let's see, Giorgio, why not buy an ETF who buy only aristocrat stocks dividend, like Spider US stocks dividend 31 day? Yeah, maybe. There are a lot of bloggers who advertise dividend stocks, dividend growing, dividend aristocrat. Look at Ben Felix, the irrelevance of dividends. Full stop. Let me take some other. No. I don't advertise things that every blogger, every YouTuber advertise. This is just Google Zurich. This is a celebration of the Google office in Zurich. Somebody asked me, you only wear Google t-shirts? I still have like 100 of them. I didn't buy t-shirts for 10 years because Google were giving me 100 of t-shirts. I have really 100 t-shirts. And some are amazing. This is a Google Zurich office, and this is the Matterhorn, or for Italians, the Monte Cervino. And that's a Google t-shirt. Yes, I know that there is like, I not investigated that. I have the impression that ESG is like bio, or when you go on the grocery store, you get an apple, you put bio, and then it costs double, and you're not sure what's actually what are the ethical limits. So I haven't investigated yet. Sorry, George, but when you tell that a stock is expensive or not, are you saying that the stock market is not efficient? Yeah, I know. By expensive, I just mean, of course, I'm an efficientist, even though I don't act as such. I'm still living in this cognitive dissonance. But when I say expensive, I mean just price to book or price to earning ratio. So for me, Tesla is expensive because it sells. I mean, it's priced like infinite times their earnings. For me, that's expensive. If this being expensive is motivated, the market knows, we will know. Maybe it's cheap. Maybe the problem is that like Tesla, or like saying that the stock is expensive by measuring with multiples, like price to earning ratio or price to book ratio, it means thinking that there is too much expectations on the company. So I prefer companies which we don't have much expectations on. Do you prefer accumulating ETF or distributing ETF? It's pretty relevant in Switzerland. I care more about how much taxes I would pay at the end of the loop. There are distributing dividends who let you deduct, recover the withholding tax. And there are accumulating dividends that accumulating ETFs that don't. So in the end, it's complicated. I care about minimizing expenses. Okay. In Italy, it's different. In Italy, people should buy accumulating because you postpone the moment where you pay taxes. Okay. Wow. Giorgio, but you are not an investor. You are an ETF trader. Anyway, you see, as I said, I think I was a sane man until late 2019, when the market seemed more predictable, more standard. But then since late 2019, then 2020, I just got confused. And I'm learning who I am. I'm learning that I'm not very risk prone, that I'm risk averse, and that I like safety and security. Sadly, in an investing environment where yields are low and not guaranteed. I mean, if I can put all my money in the Italian bond that I already have that gives me 6.5%, I would put there at 6.5%. If you take 1.5 million and you get 6.5%, it's a lot of money. So for me, I would do that. If you are young, if you're 20 years old, if you're young and you have the first 10K, you should invest in like 10x leverage. You should like play the roulette. This is not financial advice. This is not financial advice. Disclaimer. How do you get the green card? I mean, I'm in Switzerland. It's not called the green card. It's called the C permit. There is permit A, B, C, L. There are several kind of work permit. Mine is the C like crazy. And essentially, if you are Italian and you've been here for 5 years and you started with a B permit, which is 5 years, then after 5 years you get it. After another 5 years, so in 1.5 years, I could start the naturalization. I could get the passport, the Swiss passport, start getting this. Well, why not? If I'm still here and I want to become a Swiss citizen, why not? So it's not a lottery. Hi Giorgio, I couldn't watch live for some minutes. Maybe you already said that. Where does your salary come from nowadays? I still have a job. I work in a research institution. I'm a principal software engineer. At the moment, I'm in another time in a personal crisis, and I want to do this. It doesn't pay the same. As we can see, it doesn't pay the same. Here is the mind the gap. So this is the difference. It's an order of magnitude. I don't need the entire row 93, but I cannot survive with row 95. So, but if this grows a bit, then there is also row 96, which helps. And I don't know. So at the moment, I'm still employed. Another couple of questions, then I'll keep going. If I were in your clothes, I would remain in Switzerland. As Italian said, yeah, I know. But Italy has pizza, pasta, e o sole o mare. How can I live without that? No, that's not true. I love here. I love being here in Switzerland. For me, this is the closest place I've been living that looks like living close to the sea. You say, wait. Last time I checked, Zurich is probably the farthest place from a sea that I can think of. It's like 500 kilometers from the sea. But this looks like a sea city. Like looks like you have rivers, you have lakes. There are a lot of swimming pools. I remember in summer I was like after leaving at work at 5 p.m. I would just like throwing myself into rivers and to lakes. That's amazing. I've been living 5 years in Milano, and Milano looked like hell to me. Even in Rome, I don't like my neighborhood. I'm in the east part, so I'm like 50 kilometers from the sea. Yeah. So I love staying here. But the problem is that here, as you can see, expenses are... Let's change scene. Maybe I will drop less frame while we do some Q&A. As you can see here, 7,000 per month. In Italy, we could live with less than half of that. And I would be financially independent. That's the only reason I'm thinking about Italy. I would be financially independent. And being financially independent in Italy, it means that I can do whatever I want. If I could do whatever I want from here in Switzerland, I would stay in Switzerland. There's no question. I'll try to be quick. Which percentage were you used to say while working in Google? And that's in my... Okay, let's switch back to the other... Nope. To the other scene. And quick. For example, let's look at 2020. 2020 has been half and half. Let's look at 2019. 2019, working the entire year in Google. Boom, 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 boom. Here, yes, salaries were a bit higher on average. Like you can see, there is some special month where you get a lot, and it's just salary and bonus. Then there's also stocks. So there were months like 40,000, months like 60 fucking thousand. Okay, it's dollars plus francs. Oh fuck, that was December 19. 60. Okay. Yeah, 2,000 dividends seems like, this was like, I don't know, some rounding error. I used to save 2019 end of year was 69%. Of course, it's distributed along the year. So when you get December, you get much higher saving rate. When you get August, where I've been probably just maybe taking some unpaid sabbatical, I remember, you get lower. But on the average, 69% in 2019. 2018, I think it was around, where was it? 74%. Yeah, I was roughly at between 65 and 75. So far, 2021, we are at 62. I mean, it's not bad. I'm not complaining. Last question. There are so many questions, guys. That's amazing. Yeah, thank you, Michele. I saw you also asked what's the rationale. I think I explained before that it was just temporary. I sold a lot of stocks. I had a lot of dollars. I didn't want to buy Swiss francs and holding on interactive brokers and pay negative interest. I said I need to hold dollars for the short term because I'm probably going to buy stocks again in the near future. Where should I put it? Let's take the least volatile bonds that I can find in dollars, and that was it. Almost zero. Almost zero. I don't spend much. I got a lot of hardware for free. I still have I have a $4,000 MacBook from work that I've not used since 6 months. I mean, I'm not using much. I don't care. I mean, I don't care about crap. I should. Okay. Stop. No, there's no ageism. It's just that you get older and you get less productive probably as a software engineer, and technology changes a lot and blah blah blah. Boo. Too many questions, guys. Okay, and it's 11:20. Okay, what I want to do right now, I want to deep dive into expenses. Like 10 minutes into expenses. Then we'll take a look at the fire metrics, and then we will freeze and do the next column. We should be done by midnight, hopefully. Okay, let me check that everything is okay. Perfect. So expenses. In the public spreadsheet that you can someone is there is a tab which is 2021 expenses. Boom. And here you have my expenses for the month, split by primary category. Okay, I'm keeping those category division constant since 4 years, even though I would rather rearrange and resplit. But that's good for having comparison with the previous years. But I'm not sure it's the best split. Anyway, I have housing, which is everything which is like rent, even utilities, whatever. Health, which is, insurances, doctor visits, medicine, whatever. Grocery, like buy food. Transport. Wait. No, travel 000. No, I didn't see it coming, guys. No. Okay. This makes me cry. I need to get other bag. Very small. I'm not getting drunk. Travel 0. Okay. The average in 2020 on travel per month was 350. In 2019, the average was 1,000 per month. 2017, but that includes probably our honeymoon. Oh fuck! Average 2021 in travel is I didn't see this. 0 expenses in travel, which is of course. But I didn't buy any ticket for anything. Wow. So by out, I mean eating out. So restaurants, takeaway, or even food delivery, or if you go to a bar, whatever. Baby is the costs for having a kid. Actually, not all the costs. Those are the costs that are like easily measurable, like childcare, other things, but not whatever our daughter eats. That's in grocery because it's part of the family. So I'm not measuring how much our baby costs in total. Even her health insurance is in health, so it's not here. So the baby is probably costing an extra 20% more. So that's how much it costs to have a baby below age of 4 in Switzerland. And we are sending her to the childcare 3 days per week. If you send it 5 days per week, it's like add another 1,000 to this. Clothing. Yeah. Leisure. You can see a spike in March because we're getting bored. We're just burning money in stupid things. No, I mean, sometimes we pay ourselves some pocket money. We have Revolut accounts, both me and my wife. We don't want to, I mean, if she wants to spend money without me knowing, she gets money on her. Maybe she wants to like buy a gift to me. She doesn't want the entry to show on the credit card, and she knows that I'm a nerd, so she has some like protection on this. I'm not doing over controlling. I'm not over controlling her, of course. So she got 300 francs in her Revolut account, and for me, since I don't track her Revolut account, that's expense. As soon as the money hit, like leave our bank account, it's already spent. So if she still has 300 francs on her Revolut account, we'd be richer by 300 euros, but we don't know. Gifts, oh holy fuck, we are cheap as. Fees, those are also, I mean, that's weird because I used to put in fees like blog hosting costs. So now that I spent some money for the blog, for example, renovating the hosting or paying like Calendly or other tools, they happen in fees. At one point, the blog, if it gets an entity, it should be out of our like balance sheet. So anyway, that's the total by category. Okay, and here there are amazing graphs. You can compare months, for example. Like now I picked January, February, March, and the average of last year, which is the green one. So you can see by category. And you can see that travel. So baby is more expensive this year because we are sending her 3 days per week. Last year we were sending her 2 days per week to the childcare. But I think it has a lot of advantages. She started speaking Deutsch and we don't understand her. I don't understand her, but it's good for her. So, and childcare here is expensive until age of 4. So it's another full year. So 2021 and until July 2022. But we have an amazing plan for 2022. We're probably going to leave her, like to get out from the childcare in end of April, and we are going to spend 3 months somewhere around the world, whatever, before she starts mandatory schools, and then she has like vacation days like adults. So here, graphs, like you can see things, expenses with savings. So the green part is what we saved. Whatever. But I wanted to share my personal, how I do track expenses. So those are, or April is not started, but you already spent 5,000. Boom. At day 0, actually at day minus 35 minutes, we are minus 5,000 for April. Yeah, that's cool. But how to track this? I have, those are primary categories, that the 12 that you can see here. It's the same that I track on the public, on the, oops, here. And then I have a much larger document here, which has primary and secondary. So yes, I'm a nerd. So on housing, we have several categories. So rent, those are common charges, internet, if you buy furniture, if we move from, I should kill this, we are not moving here. If we have a cleaning lady, or if we pay any taxes due to the housing, sometimes you do. TV costs in April are coming, electricity bills, even our smartphone with Wingo, I count here. So I have primary and secondary. This is much more detailed. And then for each month, let's take March for example. For each month, I enter mostly manually. I had some script from some sources of expenses. Mostly manually, I enter like an expense name, soap bubble for baby, date, amount, currency, and here you have the converted in Swiss franc. So if it's Swiss franc, it's just copy that. If it's euros, you multiply by euro to CHF. If it's dollars, whatever. Here, Swiss franc are called C, not F. Yeah. And those are the entries. And then I have a primary category and a secondary category. And here you can see that March is this guy. I also, I put everything here. Those are the entries for March, February, January. I already put things for April, for example, that I know that they're coming. They're already in the calendar. There are whatever, something like rent is happening, childcare is happening, no way, and it's already 5,000 for April. So yes, and then here in the main larger expenses, I aggregate by first category, doing some formulas, spreadsheet magic. And then I also aggregate in every spreadsheet for secondary category. And here, for example, I also like to have a graph of where this is the grocery spending. A bit too big for this thing. Grocery spending, Migros, Coop, Spar, Aldi. We are Migros family, as you can see. Migros is the main, Coop, and then the others are like getting some money. Yeah, so that's how I track expenses. I don't have automation here. Sometimes I add some extra information, like we paid in cash, or sometimes I say that this is the last one in one account. So when I go back to the account, I know what was the latest expenses from which I should start accounting. If we pay with Revolut, if we whatever. Yeah. Yes, expenses. Boom. 7,000 per month so far. And as you can see, I start the month at minus 5,000. So the other 2,000s are grocery. It's like 800, 900. And then there's always something. For example, I don't know, maybe a bus ticket. Sometimes you order food, you go to a restaurant when you can. Or sometimes you need to buy something. I think we can cut expenses a bit, but housing, we decided to get into this amazing house. We like it. It's low. It's below. How can I say? It is below market price, so it's okay. We cannot cut it at the moment. Childcare, yes, we could cut it, but we think it has a lot of value for our daughter. And health insurance, 800 per month for the three of us. We shopped for the cheapest one. I don't think we can cut more than another 50 if we do some trick. So that's how it costs to be 3 person in Switzerland. I know I have a friend who spent 4,000. They live in a much smaller apartment. Their son, which is same age as my daughter, doesn't go to childcare, and so my friend's wife is taking care of the child. Yeah, that's amazing for spending. I think we are okay with this level of expenses. No, I'm not. I want to spend less. Take some comment. I don't know what this person is. Let me check. timeout. This is a question I get all the time from Italians. You are so Italian. I have an answer. I have an answer. I think I replied to this guy, but that's in Italian, so that's for Italians. Then you might take a screenshot. I replied to this guy. That's in Italian. I will try to translate it because I think it's important. But Francesco is Italian, so maybe it's okay. Just take a screenshot, read everything. First, in Switzerland in Europe is the country with less home ownership. And it's actually, like, if you follow the links, I should probably put the link where all the links are. It's not for today. Here, buying a house is super expensive. It's super expensive, and let's go back here. And rents, they're not that high. They're not high. I pay 2,000 of rent and 300 of like common charges, including heating, and I'm always in t-shirt. So it's 2,000 for 110 square meters, like an amazing place. 2,000 francs, it's 1,800 euros. I don't know if in Milan you can get 110 square meters with 4 rooms for 1,800. So this is, I think it's cheap. And you see the salaries. This is not an Italian salary. If you buy this house, it will cost roughly 1.5 million. Yes, of course, the interest rate is low, so you will pay a low rate on your mortgage. But first, if things go south, you are doing things leveraged, so it's a mess. If interest rates goes up, it's a mess. If everything stays stable, the fixed unrecoverable costs of owning a house here, they are not zero. You still pay interest on your mortgage. You still pay property taxes, which are not as cheap as in Italy, and you pay everything that happens in your house, every repair. I think if I were owning this house, I would still be paying 1,500 per month in unrecoverable costs. So now I'm paying 2,000 in unrecoverable costs, which is a bit more, but I didn't put 500,000 as a down payment, and I didn't pay any fixed cost for buying, and I will not pay any fixed cost for selling. And I like the freedom at the moment. I don't know where I'm staying in 2-3 years, so I'm okay paying myself this insurance premium of being able to move whenever I want. And here it's not like Italy. Here, having a landlord, it's not the end of the world. I've never met my landlord. Like that, it's not a person. I don't know. It's an insurance. It's a bank. I actually got an email at one point from the Verwaltung, the company who managed the building, that say, hey, by the way, you have a new landlord. Someone bought the entire building, so starting next month, the wire transfer you do to this other entity, which is like, okay, someone bought my flat and nobody came visiting the flat. That's weird. So you don't have like pressure, like 70%, 65, I don't remember, between 60 and 70% of the Swiss residents, they don't own their house. There are countries where a lot of people own their houses. Like the top one in Europe is Romania with 95%. Then there is like maybe Italy. How's it called? Home ownership by country. Let's take this a look. List on countries by home ownership rate. Like, yes, look at this. Yeah. I mean, do you see some correlation between the countries, Switzerland, Germany, Austria, that there's less ownership, and the countries which are on top. Excluding some exception, it seems that countries with a higher wealth level, they tend to be renting more. So that's an Italian question. Oh, why you don't buy your house? Every millionaire should buy their house. Nope. Nope. Okay. Back on track. We are almost done. Promise. Okay, we've seen everything. Just the fire. I still track the fire metrics. Oops. Where are we? Here. Okay, I have some fire dashboard on my spreadsheet. I don't care much anymore. So the ideal section here is if I would move back to Italy, would I be financially independent? Okay, how much I'm expecting to spend? I put 3,500, which seems a nice amount. Not sure it's the real expense level. I'm not living in Italy, so I don't know. What's my desired withdrawal, safe withdrawal rate? I started with 4%. I don't think 4% is wise. I lowered to 350. Now I have Pi, so 314 just for fun. I think I'm trying to postpone the goalpost because I'm there. Yay! 100%. I could be early retired in Italy if I accept a safe withdrawal rate of 3.14%, which according to early retirement now should be safe. I don't think it is in euros or in Swiss francs. And I could spend. I'm able to withdraw 3,500 per month from my wealth, which is not. I mean, that would be gross, so I would need to pay some taxes, which asymptotically will reach 26%, which in Italy. I see I'm dropping a lot of frames, guys. I'm sorry. I will fix this, but maybe I'm skipping something. Yes, 35,000. Sadly, it is, as I said, that's gross. So probably, like in the worst case, if every withdrawal is 100% capital gain, which is impossible, it would be 26% taxes. But if I move back to Italy, I would of course clean my capital gain. So I will sell and rebuy as soon as I go to Italy. So once the asset I own will double, every withdrawal will only be taxed 13%, just half of the. So, I mean, let's remove, in the worst case, 700. So it's 2,800. I would be a fire in Italy. Yep. In Switzerland, things are different because here I don't take like an ideal spending rate, but I'm taking the current spending rate, which is the last 12 months. And as you can see, it tends to increase because it's a sliding window, and the last 12 months have been more expensive than the previous 12 months. So the more we spend, the more the goalpost, the fire number will move. So at the moment, it's 2 million. It's roughly twice as much as we have right now. In fact, we are at slowly growing, but at 56%. I'm not early retired in Switzerland, of course. Okay, thank you. So I'm not dropping much. Cool. I see the stats here that say I'm losing some frames, but okay, cool. So yes, those are fine metrics. What's left to do? So now the magic time. Let's do April. So I will select all the rows, Control C, Control V, and then some adjustment. Boom. So those, of course, are the same. Yo, bro. Okay. Yeah, yes, same formula here. Okay. Yeah, the comments that I need to clear them here. That's boring, but that's what I do. Boom. That's the mechanical part of setting up the next month. I hope to sell things, blah blah blah. Yeah, this is so this every 2 months gives me some dividend. So this is like, sadly April is not giving anything. So all the cash I usually, to avoid mistakes, I will boom, just copy identical, taxes. What is this? Okay, this is not another plus 7,000. So sometimes I do something manually. Okay, comment go away. Then this, the past, this is okay. This is not okay. I have not paid any with. Okay, this one I will put equal to this. Other CHF. Now I'm going to get also the salaries plus here, which is not going to be this one. I will also put, well, wife salary doesn't, I mean, she might earn something. I think there is also, yeah, I can do it faster. I think there is blogging is measured in, yeah, it's measured in Swiss franc, but I have entries in dollars, in whatever. Plus, okay, this is I'm carrying over. I will usually also soon add the fixed expenses. So this is childcare, those are rent, this is health insurance, internet and whatever, and smartphones. Boom. This one, that's still coming, but then there might be other, there will be other dividends. So no, so let's add future dividends. Okay, and in euro we don't have anything. So now we go here and we clean this. Is not I will reset this to this. At the moment I've earned 0 in the blog in April. Of course, dividend, these are coming, so this is coming, of course, and those maybe not. So, but at the moment is 0. And I think this needs to get a new entry. This, of course, I not earned any cumulus. Yes, we are almost done. This is coming from the expense, the small expense sheet. I will put something from current known April expenses. One day I will integrate this into the other. At the moment, boom. Okay, so now this should be grabbed from here. Yes. Here I'm going negative. This is so let's say now I'm moving the goalposts. I want to be fire in Italy, and yes, I have something to work toward. Yeah. Okay, that's it. Blog income at the moment I have nothing. This is okay. So now time to freeze the currencies. Boom, boom, boom. So Control C, Control Shift V. So now this is fixed and this is now floating. So even though it's not midnight, I don't care, it's okay. And also here, ETFs and stocks. Let's Control C, Control Shift V. Let's fix numbers. Oops. So if nothing happens, if the world stay, if nothing happens, that's the default increase of our net worth just by saving. Even, okay, we of course will spend the usual extra 2,000, let's say. So all else being equal, those are the expectations of our net worth increase. So if currencies stay the same, investments stay the same, I get no dividends, the blog earns nothing, I don't find any 10 francs bill on the street, oh fuck, it's already going down. Yeah. Yeah, that's the expected return of a normal month. So you can see that March has been pretty awesome in regard. So next thing I do, so this is like the 10 minutes routine when I start a new month. Okay, and now I'm ready to change those numbers until the end of the month. Next thing I do, and I have other graphs, like this one, historical net worth. I already put, okay, the entry, yes. So this is our historical net worth, tracking since when Freddie Mercury was still alive. If you don't know, I mean, 30 years. Fuck, 30 years of tracking net worth. Yes, I mean, just call me mad. It's okay. Call me nerd. And that's what it looks like. Not bad. Not bad. The colors are currencies. So the dollars, francs, and euro. Yeah, looks like exponential to me. When I started blogging, I was somewhere here in the below 500,000. So together, thanks also to the accountability I have toward my readers, I tripled from 500,000 in 2016. I tripled the net worth in 5 years. So yes, that's amazing. Here you can see the huge market drop in March 2020. Holy shit, I was probably going to die. Maybe if I look things in perspective, I should be more brave and just invest all in stocks. What could happen? What could go wrong? Yeah, this is net since blogging. I was below 500,000 and now 1.5. Net worth by currency. We're done. We're almost done. I see that you're going away. Yeah. This is my currency split over time. When I was in Italy, I only had euros. Then came to Switzerland, started earning but saving, not investing. So you see linear growth, saving Swiss francs. Hey, good. I had almost 200,000 Swiss francs. Yes, maybe I should do something. I always also got some dollar because I was getting Google stocks. And then I decided to invest early 2016. And then investing brought me to invest more in US dollar things. Now everything is US dollar. Right? If you take a look at the percentages here, I'm kind of hiding. Yeah, my assets in euros are zero. the Buoni Postali, the Italian bonds, just that. Assets in Swiss francs are almost like the 100k in bank account plus the 400k in pension accounts, and then everything else in Interactive Brokers is US dollar. Are there absolutes here? Yes. Okay. This is like 880. Oof, cool. In dollars. Yes. And this is like I'm a nerd. Net worth by asset class. Did I Okay, let's create a new column. Insert one right. This should probably just work by cutting and pasting and let the magic formulas do the magic formulas. And yes, we've seen this. So percentage wise, I used to have only cash, then I used to have a lot of stocks, 50% stocks, 60% stocks, and then boom, going down and then going up a bit again. Income is the graph that I like the most. Let's see, do we have already put? Okay, cool. Okay, this is income over time by I'm getting in the way. Yes, let's do this. This is income over time since 2016 split by income source. Okay, the blue is my salary. So when I was at Google, I had a base salary. Every here and there, like in December and January, I got 13 months and then bonus. So boom, boom, December, January, salary high. Red was Google stocks. And that's the total expressed in Swiss francs probably. So what the fuck? Yeah, when I was at Google, I had some months which were, what is this? I don't look at this frequently. How much the fuck? How the hell? December? Yeah, we saw that before. So it's like 50,000 in a month. And it's not going to happen anymore. Now we are in this area. This is the RIP after Google. I had few months of unemployment, paid, not bad. So here I was like making less money. Mrs. RIP was also getting some money. Now I have a higher base salary than Google, but that's it. No bonus, no stocks. That's it. Just 15,000 per month after pension funds. But then there is this yellow. What is it? It's the pension fund, of course. There is also some dividend. And this yellow here is the blog. So the blog is bringing some money. And here I have another graph, which is like based on 100%. Which percentage? Yeah, okay. Blue is my salary. When this will disappear, we had 1 month. Here, some of you might be asking, what the hell happened in May 2016? I was already burning out and I asked for a month, a sabbatical month at Google, and I didn't get my salary. So that month is here. Mrs. RIP was the breadwinner at home. So we survived because she was still working. We survived. I mean, in the end, I think we earned 7,000 that month. Was it May? Okay, now I'm curious. May 2016 net worth. Then we are done. It's midnight, promise. 2016 in May. Yeah, we performed good because of market, of course. But income was low. And we ended up with a negative saving rate for the month. We burned 200 francs in May 2016. Okay, guys, I'm done. I'm gonna take some questions and then we all go sleeping. Still 100 people. I mean, that's going much better than I expected. Okay, let's take some question and then celebrate. Mr. Rip, you're awesome, even though I prefer when you express things in Italian, even though they are hard to explain. Yeah, I'm trying, and since I'm going to post this in my blog, I'd rather do it in English. This will be a recurring monthly thing in English. Okay. Anyway, good job. Money must be respected, not loved. I don't love money. I love the freedom it gives me. I don't love money. I'm a number nerd anyway. I love the freedom it gives me. Bye, Francesco. I can see that real estate is zero. Never invested in real estate? No, you see it wrongly. It is zero right now. But if you go to net worth by asset class, here, the yellow part, it was greater than zero. I invested in real estate. Here, real estate. You see? I had a flat in Italy, a shitty flat. And I like it. I got rid. It just lost money. It lost me money. I got rid in July. I got rid July 2019. So before COVID. I had a bit more at one point because I was also investing in a rate, in real estate investment trust in funds. I think that's a better alternative if you want to invest in real estate. Just buy a rate fund. There are commercial, residential, whatever. Now I don't invest in real estate. As I said, I think it's another asset which is highly overpriced. But in future, I don't know. Anyway, investing in real estate and owning the house you live in, it's different. So I don't know. I might restart investing with like few thousands, few tens of thousands in real estate in rates. Before buying a house and investing several hundred thousand, I will think a lot of times. And the real question that I was waiting, you should have asked this on Friday. On Friday, I'm going to do a live in Italian language about like fun stuff. I will tell you like Google stories. I will share something that well. By the way, in 2 minutes will be 1 year exactly since I quit Google. I quit Google on the end of March last year. And I remember at this moment, like at midnight, I was still in possess of the official laptop. I was refreshing internal pages to see if I was being kicked out at midnight. And at midnight 10, I would still have access to several tools. So I could do things. I posted on some forum, hey, by the way, guys, I'm a former employee. How are you doing? And some internal mailing list. I did something stupid. Exactly now, 1 year ago. 1 year, let's do this. 1 year without Google. How am I doing? How was I doing 1 year ago? 2020, March. So at the end of March 2020, so it's not a good benchmark. 2020, March, our wealth, let's measure it in Swiss francs, was 1,200,000, so 1,200,000. Today, after 1 year without Google, I'm at 300,000 more. So I didn't die, I didn't starve, I got salaries. Even if I hadn't got any salary, I would be up 200,000 for some reason for investing. So I survived. I'm actually much better. I'll talk about Google in other episodes. Did you make up your mind about the future of index investing in the future? Yes, I don't think index investing is risky. I mean, when I was pondering on the question, there were not that many active investors. Now we see people love it. There's no way everybody is going to be passive. There's no way. And as soon as many people are going to be passive, then there is price discovery. Someone will enter to arbitrage. This is called the Grossman-Stiglitz paradox. So it means that the market cannot be 100% efficient and cannot be more than X% inefficient, or else there are incentives for active investor to enter and to leave the market. And right now, with markets crazy, we see what crazy people with a meme can do. With their diamond hands, they can send crappy stocks to the moon. So That's perfect for passive investors. I'm more scared than like everything is overpriced and we might go into a decade-long drawdown. Take a look at I've written a post on my blog called, I don't remember, the name is like Rolf. So the Swiss investor who invested at the beginning of the dot-com bubble, after 20 years, he's kind of lost money, like nominal terms. So we might enter a multi-decade drop down, and that's my main concern. So that's the problem. It's not relevant. It's not due to index investing. I see that there is someone asking the same question, which is not relevant to this moment. Okay. Do you have advice on choosing expense categories for someone to start monitoring now? Should you get the first April fish of the I don't know. No, I was tuning all the time. Just look around. There are. I mean, what would I change? So that may be a better question. Let's take a look at the small expenses. I will keep housing. Maybe one can split rent and everything else. So furniture, common charges, and utilities. This can go out. Health, that's not much you can do. Groceries. I separate transport and travel, because transport, I think what's local, travel are like vacations. There's no, I mean, if you have something which is specific to you, I mean, if you're a guy who loves watches, you might have a category for that. If you are a guy who love video games, you might have a category for video game specific. Or if you, I don't know, maybe you could have categories customized to you. I think there are, I don't know, tech gadgets. If you, I mean, you buy things regularly. I think that the big ones are housing, health, grocery, transport. Here you can see we don't have a car, for example. We don't have a car, we paid nothing. We rented a car a couple of times. But if you have a car, this may be larger. You might have an entry for restaurants. You may aggregate this with groceries, so you may have food spending. Travel, it's okay. Clothing, it's maybe can be aggregated to other things like leisure. I don't know. I don't have a, but anything is better than nothing. So just get one split. You can tune it in over time. You will find your ideal. Okay. You just entered. It's midnight. Okay. I just entered. Maybe you already replied to this, but why do you have so much in bonds? Because I think bond is the new moonshot. Like bond, I think they are going 10x. And you got the first April fish. Pesce d'aprile. That's a good question. Actually, we are with Mutual, and I never got this offer advertised. When we were with Assura is a bit cheaper, but I hated their customer service, and you always have to pay in advance, and then we'll refund you. While Mutual, which is the second cheapest, you can send every bill to them and then they will charge you. It's less bureaucracy intensive. But they never advertised this to me. I might reach them out next year. I think the discount is 2-3%, which is, I mean, it's not bad. It's like if you are earning money on cash that you would pay anyway. So how much do you pay in health insurance? 800 by 2, it's 10k. So on 10k, I think it's 2%, 3%. 2%, 10k is 200. Yeah, I mean, why not? If it costs me more than 2 hours to discover, not anymore. Guys, it's been amazing. We've been through a long journey together. I almost died at one point. I had to stop and take a break because I was like coughing all the time. So what to say? It's been a pleasure. So let's get back. Radio Rip. It's midnight. Chill out. Relax. And I hope your first quarter of 2021 went as well as mine. Enjoy, breathe, air in, buy stocks, air out, sell bonds, and have a good night. I hope you enjoyed. Next episodes will be shorter. I will not re-explain my spreadsheet all the time. Yes. See you guys.